Hello traders, Gary Wagner here. Just about 11:15 in Honolulu, 4:15 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. November the 11th, 2016, and this is the Daily Report for Gold and Silver, our weekend review. And what a week we have seen in the market. Devastation in the precious metals, immediate turnaround from moving up $50 higher just following the news that Donald Trump was elected as the 45th president of the United States. Equities markets tumbling, Dow Jones Industrial Average off by about 800 points before closing by the end of this week at a new historical and record all-time high. Dollar, greatest upside move since I believe 2008. We've got a lot to report. Let's get right to it. Gold futures trading off dramatically this week and capping it with a substantial sell-off today. Futures off by $42 at $1224.20. That is a decline of about 3 1/3%. It's traded to low of $1218.70 and a high of $1265. However, that drawdown of 3 1/3% pales in comparison to what we saw silver do today. Silver off over 7.5%, a decline of $1.40 plus per ounce to close at $17.32, the low $17.17, and the high $18.85. The other thing with silver is we've noticed a disconnect between silver and gold prices, with throughout the week silver moving higher on days when gold moved lower. We are going to explore that as well as where we can find some potential support in silver when we pull up our first silver chart. Traders, one of the best ways I can illustrate the extreme volatility that we saw this week in the market, consider the following chart. We are looking at a 30-minute chart, but it's a simple line chart because I really need to show you the kinds of intraday and election-type cycle moves that we saw. This is the beginning of election day, the 8th. And as you can see, as we went into the election and Americans went to the polls, the market stayed quite steady, but actually had a bias to the downside. As the results began to come in, and as it became apparent that Trump had won the election, what happened was gold really started to spike up and move quickly to the upside, actually trading up about $50 during that evening session. However, as the news started to get absorbed by traders and investors, we saw the equities markets, which was down 800 points vis-a-vis the Dow Jones Industrial Average, turn around, and we saw oil begin to really sell off hard, selling off during that day. As you can see, this is the 9th. This takes us to the 10th. By the 10th, or 2 days after the election, we were looking at gold trading at about $1260, $1255, and then through the course of today, meaning the evening session started here, we then saw the market drift even lower, all the way down to the close at about $1220. However, I do believe that there is a potential ray of hope and a potential bottom in the market in terms of gold prices. And to do that, we really need to look at a weekly chart. Consider this: at the beginning, or I should say the high of this week, this is a weekly chart, but the high of this week took gold up to about $1334 with a low of about $1222. Any way you want to look at that, that is a basic move of about $120 to the downside. Now, there's a couple of ways to look at it, and the key is at some point this market will find support, and the question is where is that area? And there's two major factors that are telling me that we could be getting close to a potential bottom or conclusion of this sell-off. And it's based on two factors. One is a candlestick pattern that we identified, simply called a three-line strike, and this is the bullish version of that. Of course, we'll talk about that in just a second. And then the second thing is that we do have a fib retracement that comes in at around 1215. It is a 23% retracement from these lows at 1050 up to the most recent highs at about 1380. When you look at that, you've got this 23% retracement level that comes in as I said, roughly at 12.15, not very far from where we are at. Now, the thing that I was talking about in terms of a pattern that we have identified is simply called a three-line strike, and it is the bullish version. It is a 4-candlestick pattern in which you have had 3 consecutive candles moving up. Typically, they look at this with a daily chart. In this case, 3 weeks with an uptrend, and then a long red candle that takes away all of the gains and actually closes below the low of that first candle. And traders, so the pattern plate itself looks something like this. I've just gone ahead and put up a pattern plate that will give you an idea of what we're looking at right here. And you can certainly see that there is a lot of similarities between the formation of these most recent 4 weeks of activity and this pattern right here that we've just highlighted. Now, in terms of different candlestick patterns, this is absolutely one of the more rare patterns. If we see signs that this market does begin to recoup, we could have a superlative move in the market and see this market really bottom out. Now, the basic definition of the bullish 3-line strike is, as I said, it's formed by 3 green candles followed by a red candle moving down. As you can see, we've met pretty much all of the criteria, but there is a final piece that has to be met on this pattern, which is our confirming candle on this particular pattern type. But we would need to see the market bottom next week. It should have a low that comes in around 12.15 and test that. And then we need to see something like a piercing line pattern from the last 2 candles in engulfing bullish, even a bullish harami. The key is this, is that there is a huge possibility that we will see this market find support in the next week or two around $12.15. That's based on these technical studies, the identification of this pattern, the bullish 3-line strike, along with the fib retracement level 23% at 12.15. As we have been talking about throughout the entire show, we have seen extreme volatility and just numbers like we've never seen in terms of percentage gains or percentage losses. Silver is really an interesting precious metal at this point. First of all, closing off today 7.5%, down about $1.40, $17.34. The break is hard. The break is substantial. We can see that break by looking at this support line that we've simply created by looking at these series of lows right in here and then extending the line forward. We could also see that once the market dropped, this of course being the beginning of October, that this area served as a real resistance area until it popped back above. Then you can definitely see it as a support area right in here, and then a clear and utter breakdown, as I said, moving to these lows that we haven't seen since October. Now, there's another thing that's quite interesting when we consider silver prices recently. We really saw that over the last couple of days, and that's a basic disconnect. Now, we had gold and silver moving substantially lower today, dramatically lower today. But consider the other day where we had gold down about 1% and silver actually up 1%. There was that disconnect. What we will make of it, will that trend continue? That's something we'll have to see how it unfolds. But as I said, when we looked at gold, I think that we could see some sort of a potential bottom next week or the week after. And of course, that's technically based. As far as silver goes, if we find support at $17 per ounce, that says one thing. We have some areas where we can see that that is a area which on a technical basis can provide us with some historical reference. However, if it breaks below this particular price point, the next major level of support really doesn't come in till about $16 per ounce in silver. What a dramatic week and what a dramatic turn of events as we have the Dow Jones Industrial Average closing up about 0.2% today, 18,847, and that is a new record and historical closing high. We hit a record high just a couple of days ago, and the market has moved above that, up, as I said, about 39 points. Now, mixed bag in the equities markets when we look at, for example, the NASDAQ and the S&P. With the NASDAQ, this being the NASDAQ 100 E-mini, closing up fractionally, up 4 points at 47.48. and the Standard & Poor's, this being the E-mini, closing off fractionally about 0.25% at 2161.50. This was a week when the only certainty was in fact uncertainty, and to top that off, the unexpected occurred. In other words, the opposite reaction to what many had anticipated. Dow Jones Industrial Average closed up today 31 points at 18,838. Since Donald Trump has gotten the election, this of course being Friday, Thursday, Wednesday, this market spiked up aggressively and broke above the 50-day moving average, and then following that for the remainder of the week, traded to new record highs, this being the former record high roughly at 18,000, call it 650. We now closed at 18,839. We are at an all-time record high in the Dow Jones Industrial Average. Now, although the Standard & Poor's 500 did not go to a new record high, we certainly saw the volatility and we saw the ensuing rally. I have pulled up a 30-minute chart, simple line chart. Election day begins here. As you can see, quiet going in until the anticipated results. As they saw Trump was going to win, just as that began, you could see the market plunge down, trading to a low of 2030. This is the E-mini because it trades overseas. At this point, the Dow was also off, Dow futures, by about 800 points. But then the following day, logic prevailed, and the consensus became that with a new elected president that was really pro-business, hawkish on monetary policy, that is good for business. And so we saw the equities markets move into an unprecedented rally and substantial growth over this last week. Crude oil closing off about 3%, 3.25% today, down $1.44 a barrel, is now trading at $43.22. It has traded lower since hitting a high at $52 a barrel 3 weeks ago, and we have seen this is now the third consecutive week in which we have seen crude oil prices decline. So traders, with all of the exaggerated moves that we've seen, tremendous sell-off in the precious metals markets, tremendous rally in the equities markets, the fact that crude oil closed off by about 3.25%, down $1.44 a barrel at $43.23, is not all that dramatic. However, let's look at it this way. We've talked about the fact that as it's been trading within a defined range, we had our top target at around 52. 52 is exactly where this market came to. At that point, we said that we have hit our target. We were looking for the market to go to about 44. We've absolutely hit our target there. My sense is that it's going to trade within this channel here, highs being at around 52, lows being at around 42. I don't see it breaking out of this until there's a huge fundamental shift with whether it's OPEC production being followed by member nations or not being followed, and that of course would determine what direction it breaks. In other words, whether it breaks below this channel line or above it. However, I think that over the next week, we'll see it drift back closer to 42. We should see some kind of bounce unless there's that fundamental change or fundamental news, and then move back up this particular channel. But for next week, I do see slightly lower prices in crude oil. U.S. dollar closing up fractionally, up about 0.25%, but over this last week, it has had the largest single gain for the U.S. dollar index in a week since 2008. We are back up near those tops at 99.01. And the real tell of the tape is to take a look at the intraday activity just following the belief that Donald Trump could win and the realization that he had won and the aftermath to that. There were three basic stages to that. We'll take a look at that with a 60-minute chart. So we've seen this market move from 96 to 99, a 3% move this week. We've never really seen the market so volatile. And once again, to illustrate that, we really have to look at a short-term chart. This chart is a 60-minute dollar index chart. We can see the beginning of election day. The 8th starts here. Just as with the equities markets, slight bias to the upside here, whereas the equities markets had a slight bias to the downside, but nonetheless a fairly steady market. News comes in that the president-elect is now Donald Trump. He won the election. Market literally falls out of bed, I believe, at these lows, trading off about 1.7% just on that cycle. And then the subsequent recovery through the morning of the 9th, which begins right here. And then for the rest of the week, we have slowly progressed to higher ground until it has found resistance really at those former tops at 99. Traders, no matter what unfolds in the following weeks ahead, what we can say is that we have just lived through a week that will be remembered historically as an important week in which a non-politician was elected as President of the United States. He was elected with roughly equal votes to his opponent, and both of them were more disliked than any other candidate. Also, we witnessed a 180, a complete turnaround, both in precious metals, the dollar index, and U.S. equities, in which we saw gold trading briskly higher, up $50. As the news unfolded, we saw the stock market fall out of bed, only to see all of those markets reverse and move in an unanticipated direction. The analysts, including myself, got it wrong. I also believed that should Donald Trump become our next president, that we would have more uncertainty than certainty, and we would see precious metals prices rise and equities fall under pressure. We have remained flat throughout the entire week. We got stopped out of our trade, in fact, on Monday, a day before that, and that was due to news being released by the director of the FBI that sent gold prices sharply lower on Monday. So we pulled a small profit. At that point, my recommendation was simply to wait for the dust to settle. Traders, I believe the dust is settling, and as we talked about when we looked at a couple of gold charts, and I talked about that one particular very rare but bullish pattern, the bullish three-line strike. We have the real potential next week to see a potential bottom in this market, support, and to see gold go back and regain some positive prices. However, based upon activity this week, the only thing certain, I believe, is uncertainty. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you next week for another daily update and review. As a side note, I will be at the Silver and Gold Summit in San Francisco on Monday and Tuesday, so our daily reports will be a shortened edition from San Francisco. Have a great weekend. Bye-bye.